there was a bunch of people that can't make it and that wanted a recording, so I'll record that. There's supposed to be 38 people that signed up for this little shindig. So I don't see 38 people here, but you know what that means. You know, they just signed up. So
Nice group you have there.
I'm sorry.
Nice group you have there. I said, what do you guys mainly trade?
I think most everybody in here is pretty much futures. I know Scott, who just left, he was a market maker. He does a lot of options. You know, just over the months and times of just hanging out with people and whatnot, it just, I mean, I don't know if that's official or not, but I'd have to venture to say from the text that I see, I would say mainly futures. And I would also venture to say that I think a lot of people are leaning towards, if they're not already there, algos.
Good. Hey, Steve?
Yeah.
Can I recommend that you don't start recording until George and these guys are ready and maybe you got most of the people here?
Good.
Because you're going to have 15 minutes of wait right now.
Yeah, I'll just pause it. That's fine.
Automation requires some understanding.
But why TradeStation? I mean, I don't know if everybody, I mean, I think a lot of people are ninja.
Well, yeah, well, we don't like, you know what, when I was a broker, and that was late 80s, early 90s, when TradeStation first came online, we used to poo-poo TradeStation because we're up in Chicago, and who's in Florida as a clearing firm or execution firm? We didn't think anything of them, but that was late 80s, and here they are today. But they've done quite well in the automation, okay? We don't like the margins, we understand that, and they are a little slow to do some things, but they're good at automation, they're good at what we need to get done. That's the bottom line, okay?
They do have, they have, let me interject for a second, Marcus. This is George. They have some mathematical stuff that we could do that we cannot do it in Ninja, believe it or not. We tried very badly with Ninja. We even went to Denver, met with them. This was a couple of years ago, and we gave them our partial code. We didn't give the whole code, but we gave them a partial code. We said we wanted this to be automated. They just couldn't do it. They would not. They were not able to do it. Yeah. So TradeStation is the oldest. They used to be called iOmega back in the late 80s, and TradeStation came in and bought them out, the automation portion. So they were the first automated algo system basically in the world. So they really have some cool stuff in there that you could do. Marketing wise, they're not as good. They don't have that many bells and whistles that Ninja has, but they really have some great back office stuff that we could do that we cannot do with Ninja.
Yeah, my thing is just starting a whole new platform and learning everything all over again. It's like,
yeah, I know, I hate that. I know exactly what you're saying.
Okay, well, it's at 4:30 Eastern, so let's get the show on the road, I guess. We got a crowd of people here that are looking to see what's going on with ANT and the 5-hour trade. So I have Marcus and George, and you guys have the ability to share your screen. The only thing I ask in the room is that if you want to talk, let's not just talk all over at the same time. I'm going to try to police everybody's, mute. So I might mute you if there's some background or whatever the case is. But if you could just be cognizant of that and try to mute yourself until you're ready to talk. And then when you're ready to talk, just ask the question and see what they have to say. So without further ado, you guys can take it.
Well, let me introduce George. This is Mark Hughes with a 5-hour trend. Today's presentation is on our algorithmic trading strategy. Just a little background on George. He's a 40-year guy. This is all he's done. He started out as a floor trader back in the 80s in Chicago, was a professional day trader, a hedge fund manager for a CTA, owned his own futures in IB. And he has actually traded through the October crash in 87, the tech bubble, the banking debacle in 2010, the flash crash in 2010, COVID market dip in 2020. I'm just giving you guys that background to let you know that he's an actual trader and not just a guy that created a piece of software. We've taken this software and made the complex simple, okay? This is something that you guys can take and run with and don't have to have a learning curve to get there. And so if you have any questions, please chat in. Again, Mark Hughes, 5-hour trend. I'll answer all your questions about setting this strategy up on TradeStation, setting up an account, whatever the case may be. I'll let George go.
Thanks, Marcus. So let me go ahead and share my screen. That's the best thing to do, I guess. Here we go. All right. Here we go. All right. So we're looking at the 5-hour trend. It's a completely automated trading strategy. And most traders who are if you're trading day trading, especially, people really hate completely automated strategies because sometimes it will take a trade in your bone, you feel that that's a wrong trade. And yet, because it's completely automated, you have to go with it. Sometimes you're right. Sometimes the system proves you right. I remember, quick story before I go on. I used to work with George Lane, who was a inventor of stochastics indicator back in the 80s. And we used to trade together in his house in Watsika, Illinois. And we had a system in place. And I would go with the system. And one day the strategy called for, I think, to short the market, whatever it was. And some news came out and I did not follow the system. I went long and I made money. And he looked at me. He had a huge stick. He banged that stick on the desk. He said, "What did you do?" I said, "Well, look what happened. The market went up. I was right." He looked at me. He says, I'm going to say this only once." He goes, "I'd rather see you lose money trading the right way than make money trading the wrong way." He goes, "If you spend all that time putting together a system, the minute you start going against it," he says, "you're done. That's it. Might as well pack up and go home." He goes, "If you believe in your system, you stay with it until the system proves you wrong. Otherwise, the system makes money in the long run. It's based on probabilities, and that's all it is." So having said that, we experience this all the time, huge drawdowns all the time. And when we have a system like this that has a big profit target, very large profit target, and also large stop loss, we will have big drawdowns and big run-ups also. 5HT is based on linear regression. That's all it is. It's nothing but linear regression. We don't look at volume. We don't look at anything else except linear regression. And we have a lot of different time frames with that linear regression. We have weekly, daily, hourly, and 5 hours. And each one of these time frames have different weight given to it. 5-hour trend is 5-hour linear regression is the most prominent one that supersedes a lot of other ones. But we do take into consideration the other ones also. Hence, sometimes we take more than one trade a day, and sometimes we don't trade at all. But to answer the question into what is it based on, it's completely based on linear regression. So as you can see right now, we had a couple of 3-4 losing trades back to back. And if I look at the performance of the strategy, for the first time so far, we are down this month and looks like we're going to finish down. This includes, by the way, commission and slippage. So it's going to be a little bit different than what you're seeing in the room. In the room, you're seeing a little bit less than this. That's because it does not include slippage and commission. This includes $5 slippage, $5 commission per side, and $15 slippage per side. So $30 all in per one trade. Again, this is based on the mini, not the micro. So we're looking at 11,500 loss so far this month. If you look at the weekly's performance, go back, so far this week, we're down 14,000. Last week, we were up 10,000. So we're going to have, here you go, if you look at August, April of this year, we were down 18,000 in the third week of April. And yet the month of April, I think we finished higher. I know we finished higher. We finished up just about break even, actually, $2,800 for the month. So we do have drawdowns, and the maximum drawdown for the strategy is just about $27,000 total. That's the maximum drawdown of the strategy, and it happened last month, back in May, and yet we were able to finish the month of May on a positive note, even though at one point we were down $27,000. So that's just the way it is. It's lots of drawdowns, and they repeat themselves quite a bit, quite often. So this is not really for faint of heart who's gonna look at the drawdown and say, okay, because we have a drawdown, I'm gonna stop trading it. As long as you're well capitalized, that's the key. Is you need to be well capitalized to stay in the game. Another example I can give you is Richard Dennis, which I worked with in Chicago. He used to trade the Turtle system, which is way back in 1980s, and he used to go. He would experience 70% drawdowns on a regular basis and a yearly basis, and yet the guy made hundreds of millions of dollars trading his system. It's because he was staying with the system for a long run. So that's the strategy in a nutshell, is that it does take trades. And if I go through little stats here for the new guys who are coming in, you can see we're profitable on average 53% of the time. Some weeks more, some weeks less. This month we're up, I think 27, 28% only profitable this month so far. So it's really, really below what the average is. And the average winning trade is 3,300. Average losing trade is 1,600. So like I said, some weeks, some months we're going to be more profitable, some month less. So this month, if we go back, yeah, we're up 27% only profitable so far this month, and yet the results really shows we've done $11,000 and change. This is the 5-hour trend, completely automated, so you don't touch it. You can control the number of trades you're trading by controlling it through here. You can increase the quantity or decrease the quantity anytime you want to. I can go up to as many contracts as I want to up here, or I can bring it down. So you could do that, and the strategy will always look at what your account is compared with the strategy is. For example, if the strategy is long and you're trading 2 contracts and you want to get out of one contract instead of getting out of one contract, because if you do manually get out of one contract, the strategy automatically going to buy one more, because it's going to say, wait a minute, you're supposed to be long 2, you're only long 1, it's going to buy another one. So the way you do it, you say decrease quantity. Now you're only trading 1 contract. The strategy knows you're only trading 1 contract. It's not going to bother you. So you can control the number of contracts through those 2 buttons that you have. Otherwise, you just leave it alone. The strategy will only take trades during day session, but it will liquidate anytime. So it will stay overnight. It can get out in the middle of the night, but it will not enter a trade during the night. It will only enter a trade during day session. This is the 5NQ. We have the second strategy, what we talked about earlier, which is a daily target. This strategy is manual. That means it will give you the signals through a text, and up to you to take the trade or not take the trade. And that strategy trades only once a day. At 10:30 in the morning, at 10:27 in the morning, you will get a text saying we're going long or going short, and what the price would be. At 10:30, if we're out of that price or better, the strategy will take a trade, and it will get out when the market reopens in just about 20 minutes. I'm sorry, an hour and 20 minutes when the market reopens. That's when it will get out of the trade. And that's, if we look at that strategy's performance so far, this month we're kind of breaking even. Again, it was a bad month, looks like, for both of our strategies. It hasn't been a good month. It's been all over the place. We're kind of breaking even for the month. It's not as good as the 5-hour trend, but a lot of people like it because you're trading it manually as opposed to completely automation. And that you can see again, we're profitable 48% of the time, and the average winning trade is 2,300. Average losing trade is 1,300, and that's where the average trade, both winner and losers, is $400 compared to 5-hour trend. Average trade is over 1,000 when you combine both. Going back to 5-hour trend, if I look at the performance, and I want to show you trades, let's look at the individual trades. Here's a trade list. Let me open it up real quick. As you can see, these are the last 1, 2, 3, 4, 5, 6, 7 trades, and they're all losers, right? You can see $1,000, $3,000, $800, $3,000, $3,000 losing trades. And if I go back a little bit, this is a month before. Okay, you can see we're up 5,000, 2,000, up 10,000 in one trade. You can see up 13,000 in one trade. So it doesn't take many trades to come out of that drawdown. So right now we're down 11. Technically, with one good trade, we can make that up in no time. So it does happen. So your losing trades are much smaller compared to your winning trades. Yeah, you do have some losing trades back to back, and you also have a lot of winning trades back to back also. So I'm just showing you individual trades. Here you go, $10,000 one trade, 5,000 one trade, and another 13,500 one trade, another 13,500 in one trade. So the key is, let me show you the graph. Here we go. And this is the drawdown that we're talking about. Here's what happened. You know, your equity curve moving higher, moving lower. And right now we're down 11,000 or so. And that's my maximum drawdown right now. It's possible that it could be down another $10,000. I don't know. And the way I always traded, when I looked at automated trading strategies, my philosophy was my worst trade is ahead of me. Am I ready for it? And when I look at the performance of the strategy, any strategy, when I tested it, retested it, traded it, my train of thought was, if the amount of money I'm going to have in the account is, I double the drawdown and I cut the profit in half. Can I live with it? If my answer is yes, I'll trade it. If my answer is no, I can't, that's too much, then I will not trade it. That's a great advice for any trader who's trading an automated strategy. When you're trading, you know, day trading, you're trading it based on indicators, based on news. That's a different story. But if you're really trading completely automated strategy, hands-off strategy, that's a proper way of looking at it. Hopefully, you will never get there, but you never know. You should be ready for it. And when I look at the performance here, I say 25,000 drawdown. Can I really double that? $50,000 drawdown or 5,000 for micro? I don't know if we ever get there, but we might. You don't know, right? But if I'm making this kind of money on a monthly basis, if I'm down 5,000, 50,000, and overall on a drawdown, not monthly, but on a drawdown, I'll take it. That's perfectly okay. And that's the key. So money management is what it's at. Discipline is what it's at. It's very difficult. It's easier said than done. It is extremely difficult. And as most of you traders know, trading is nothing but psychology, psychological warfare between you and yourself. It's most of the time that's what it is. It's really, you give this to a 5-year-old kid and tell him this is nothing but a video game. I'll bet you he'll make more money than we can. It's because they don't have to worry about the money effect of it. We, on the other hand, every tick we're looking at, did it go up? Did it go down? Did I make money? Each individual trade should not really matter at all. At all. Again, it's easier said than done, though. Any questions so far? I don't have my chat open, so go ahead and speak if you have any questions.
George, why don't we go over a series of losing trades? I had a couple questions. I had a couple
good
calls
idea.
today.
Okay,
Let's
yeah,
talk about
good
that.
idea. Here we go. If we have, as far as losing trades, we had one time nine losing trades back to back. This is going back for 2 years, and the average loss was $2,200. That happened once, and it followed by a winning trade. We had once 8 losing trades back to back, an average losing trade 1,800. Also, we had once 6 losing trades back to back. Otherwise, 6 times we had 5 losing trades back to back, and you could see the math. You could see the stats. In the winning trades, we had once 8 winning trades back to back. Average win is $2,200, and 3 times we had 7 winning trades back to back. Average wins is $2,100, and you could see the stat there too. You want me to show you individual trades, Marcus? Is that what you're asking me?
This series is fine. I think I'm just popping questions in that I've heard.
I have a clarifying question on this. Hey, it's Chuck. So Marcus, I think we talked about this, but I just wanted to ask to reiterate, and for the rest of the group to hear, the statistics you're showing here, these aren't back testing results, right? These are real money trades going back, what, a year, 2 years?
This is going back for 2 years. So it's the beginning of 2020. What I'm showing you right here, this is not real money. I can't show you real money. I'm showing you what the strategy is doing. So including slippage and commission, okay? So the real money will be very close to this. We released a strategy. We've been playing around with this for a long time, from many years, but we released a strategy back in October of 2021. That's what the strategy is being released. Okay, so whatever you see after October 2021 is basically, if you were in the room, you would have seen those numbers coming in. These are actual numbers coming in moving forward from October 2021 and forward. Anything older than October 21, for all practical purposes, it's a back test. Okay. So October 2021 and forward is a forward test, or it's real in the true meaning of the word, that, you know, we've been running it live in the room, and those numbers been there every single day.
And we are showing that on a dome of an actual client account. So there's the real part. That is a client account. We've blacked out all the information pertinent to him. And so be it. I think we need to have a discussion about the stops. I know there's a lot of conversation about why are we giving up so much based on stop.
Well, that's just the way it is. You know, the stops are way out there. Let me see if I can go back. Here we go. Let me make this a little bit tighter. So here's a trade, for example. And once we take a trade, here's my profit target. The green line is the profit target, and the red line is the stop. And the stop usually, if the strategy is profitable, the stop will start moving higher with the market. In this case, it did it because it was a losing trade. But if it's a winning trade, you will see the profit target will go up, and the stop will go up and up with it. Okay. So in this case, it didn't. So the stop will never expand, but the profit target will. And the reason the stops when we start, the stops are really, really high. They're really far away. That's just the way it is, because we want to make sure. We got to make sure that. Let me get rid of this. Oh, I need to do all that. I screwed that one up.
Okay.
Okay. Let me do it over again. Hold on a second.
No one's ever done that before.
Yeah, right. Okay. Is the best thing to do is to close my strategy and open it all over again. It's going to take me a minute. 5-hour trend. Here we go. Yeah, I'm going to play around with it. Okay. So when we start, the strategy will have a rather large stop, and it will take as I said, if the market starts moving our way, the stop will start following, moving higher and getting tighter and tighter. And the same time, the profit target will also expand with it. And if the market starts contracting or doesn't move much at all, stay still, you'll see the profit target start coming down and trying to meet the price. So again, these are done with many years of testing, and these are the best we could do with it. If the minute you start coming up with a tighter stop to begin with, you're going to have much more losing trades, and the results are not going to be as great. So it does look bad when you give yourself so much leeway to for the trade to work, but that's just the way it is. Again, all we care about is the long-term results, and if we look at the long-term results, that's the best way to do it. Any other questions? While this is loading up, it will take a second.
All right, you have to unmute yourself if you want to jump in.
Hey guys, while it is loading, why you are still using 9.5 versus 10?
Since TradeStation been around, if I could use 10, it will be the same results. We've always been one release behind, because TradeStation notorious for having a lot of issues with the latest release. Until they come up with a new release, I'm staying with 9.5. That's just the way I do it. And some people, like to go with the 10, which is perfectly okay. And it's going to be exactly the same results, same strategy. And the question was for 9.5 TradeStation, for those of you who don't trade TradeStation.
That's like pretty much, if anything, you never want to jump right into it.
Yeah,
I-
you don't. Trade session is notorious for really having
Right.
issues with their latest
Yeah,
results.
it's like,
Out of nowhere.
I want to get an autonomous car, but I'm waiting for the second version.
Here you go. Here's a trade I was telling you about, but we were just went short. And you can see where the stop was. And then the market went our way a little bit and the stop came down, right? And you can see the market stabilized and the profit target started to go higher also. Then the market started to move lower, the profit target started to move lower with it. So it does do that dance all the time. The profit target could go up and down, but the stop loss can never change direction. Once he came down, it'll stay down. It can only come down. It only came down. So we got stopped out of kind of a break-even trade, but that's just the way it works. You know, it works. Here's another example. Went long, trades, here's the stop quickly start moving a long way, the same direction of the market. The market's moving higher, the stop went up with it, and the market stabilized. Trade station, our profit target started moving lower a little bit, and finally we hit the profit target. We got out of that trade. So that's just the way the strategy really. Here we go. Here's a trade that is. Let me make this a little bit smaller too, tighter so we can see it. Yeah, that thing lasted 2 days. We went long, and it came down, did not hit the stop, and the stop kept going higher, and the profit target kept going. The original profit target was here, and we ended up getting out way out there. As you can see, how much difference that trade made. You know, we did not hit the initial profit target. As the market stabilized, the profit target came down, and the market went up, and it just hit it, and that was that. We ended up getting out of that trade. So I hope that
Hey,
answers the questions.
Hey, George, got a question. So from what I see is doing like one trade a day. It's like a swing trade. Is that what it's doing?
No, it's some days it will trade more than once. And matter of fact, let's get that here and open up on a daily basis so you can see it. Today we had 4 trades, for example, right? A lot of times we'll have one trade, and sometimes we'll say one, but there is no trade. Usually if it's holding on to the same trade, it will say one. So, but some days it will have more than one trade. Okay, but some days it will go through those trades. So basically we'll hold on a trade for 3 days.
Okay.
Okay. But the other strategy, the one we talked about, the daily target strategy, that only trades one trade a day, period. Always at 10:30, if it's going to take a trade, and we'll always get out at 6 o'clock Eastern time.
But
Unless it's about-
the pivots are valid, guys. You can use the pivots throughout the day. Okay, we update those pivots. Okay.
Let me explain that too. Here's the other strategy that we're talking about. I don't want to confuse too many by showing you too many things, but this strategy, okay, we have these are our own individual pivots basically that we come up with. And the idea behind the strategy is if we're trading below, you can see if it's a red line, we're trading basically below the internal pivots that we have. We're going short. And throughout the day, will tell you what the pivots are. And if you look at those pivots, you can say, okay, most of the time, if it trades below the lower pivot, that's really it. It's not going to go much lower than that. Or if it goes above the higher limit, that's pretty much it. And you can see the market came down here and stayed there most of the time. If I go back and again, there we go. If I go back as many times, you can see it's going to be the same thing over and over again. This way. Here we go. Here's a trade that we took a short trade. Again, if it hits the profit target, it will get out earlier. If it does not hit the profit target, it will get out at 6 p.m. So we have a profit target, we have a stop. If it hits a stop or a profit target, it will get out. Otherwise, we're looking for it to get out at 6 p.m. Eastern time. Here, it got out at 6 p.m. Eastern time. Here, it got out at 6 p.m. Eastern time. You can see that, right? Unless it hits the stop. Here, again, end of the day, 6 p.m. Eastern time. That's where it's getting out. So this is a manual trading. And it's basically, we're saying if the market starts moving below our internal pivots, we're going short. Simple as that. If it's going above it, we're going long. It's only one trade a day. This is only one trade a day. And this is not bad trading either. I mean, it's really a good strategy. It only trades one trade a day. And we have a lot of clients, actually, what they do is they scalp along those lines. As you can see, we took a short trade, market came down, moved up again to the pivot, and that becomes a resistance now because we're below it. You can take another short trade, and where's your stop? It's going to be a little bit higher than that, not a big deal. So you can take another trade if you want to, and that's the way you would trade this, not necessarily straight up or straight down. Let me move forward here. One more time, right? We took a long trade here. Market came down to the midpoint pivot, and it came right back up again above the upper resistance, which is becoming the higher pivot. So you could trade that. Here you go. One more time. We're short, came down, moved up. That became a resistance. Then he came down. That would be my exit, or end of the day, the exit. So that's one thing you can really look at. If you want to day trade yourself, you can do this day in, day out.
The pivots, I was a broker at the Merck, and I had to crunch the numbers every morning for pivots. But the guys on the floor, that's what they walked to the floor with, was the pivot numbers. That was their point of entry or exit, plus price action. So obviously they didn't have the computer screens up there to show what's going on in the news and all that. They're looking at price action, they're looking at the numbers, and they knew their pivot numbers going in. I remember we had a woman that used to just crunch the numbers every day, charge $100 a week for pivot numbers, because she did the math, which was not that difficult, but she just did it and got paid for it. So you got to look at it the same way, guys. You can take this on Ninja, you can trade your size, whatever you want. You got pivot numbers, you got the math. We do the trade once a day on our indicator to validate our pivot numbers. We just do it to validate the pivot numbers to give you some insight as to this works. And either you can piggyback on it, break off the trade earlier, or terminate at the end of the day, as George says.
Yeah,
But
this strategy is not meant to be completely automated. This strategy is really meant for you to trade in the direction of whatever the trade is. Okay, as you can see, market's coming down, moves up to the pivot. You can take one more short trade, and that's the whole idea behind this strategy. We just show the trades, just like Marcus said, just so you could see what the strategy is doing. Okay, but it's really meant to be traded manually. That's really what it's meant to be. Again, short trade here, right? Market came back right below the pivot, and he came back down again. And so you could see this over and over and over again.
I got two questions on this one.
Go ahead, Stephen.
One, does the text, was that text working? Because I know it was new when I talked to Marcus a while back. Is that now available? So when there's a signal, it'll text out?
Yep.
Okay.
The first text comes out at 10:27. It'll tell you, let's say we're going long or we're going short. For example, it will tell you that we're going short, and it'll give you the number. So if at 10:30, 3 minutes later, if we're better priced than whatever your entry price is, then you get a second text saying the strategy is long or the strategy is short.
If price never gets to that price, then it's still a valid, just waiting for the price to get there. Is that correct?
Exactly. Yeah, the price will not change.
At what point does it invalidate? I mean, like obviously
at 2:30 p.m. Eastern time.
Okay, so at the end.
Yeah, no trades after 2:30. Let me double check that.
Okay.
No trade after 2:30.
Okay. And then
it is the specific time. We start at 7:30 my time, that specific time, which is 10:30 Eastern time. At 2:30 is the last trade.
Okay.
That's it. Once by 2:30 we have no trade. That's it. We're not trading that day.
So if it doesn't get in by then, it nullifies itself, and
That's it.
Okay. So the other question I had is the pivots. Are those available where the math compilation or something where I could put it on a Ninja screen?
No, but you will see them. You will see what the pivots are. We can text them to you too.
On the trade station, but I can't throw an indicator up that throws those on Ninja.
No, you can't. No, you can't. Yeah, you can't. But like I said, you can get the numbers every day, and then you can just draw a line in your Ninja if you want to.
I like automation, but okay.
Yeah, I don't blame you. Yeah, and the pivot changes, by the way, once a day at 7:30 my time or 10:30 Eastern time. The pivot changes. So you have the same pivot, coming in until 7:30 my time or 10:30 Eastern time, and then you get a new pivot. So it only changes once a day.
This only works on TradeStation? Doesn't work on
Well,
Ninja?
this strategy works in TradeStation, but since I said this is a manual trading, that means you could trade anywhere. You'll get a text from us saying you're going to be entering a long trade or a short trade, and it's up to you to take the trades on Ninja or any other platform that you're working with.
Okay, now I'm talking about
The
the
other
automated.
strategy is completely automated, and this has to be on TradeStation.
Okay,
And like I said, because it's completely automated, it doesn't really matter. It's completely automated. All you have to do is just turn the TradeStation on. It will take the trade for you.
and what was the average monthly profits? I think I saw 2%, 4%.
Let's look at it this way. Don't look at the percentages. These percentages are based on $100,000 account. So don't worry about that. TradeStation does that for some reason.
Okay,
This is the monthly dollar amount for the strategy. So this strategy, which is the pivots, we call them daily target, has a drawdown of 11,000 so far. Okay, it could go higher, but so far has a drawdown of 11,000 from opening to closing of the trade, which is a day trade. That's the maximum drawdown. This is per one mini, not micro, one mini. Okay, and so depending how much money you want to put in the account, you want to put in 50,000 in the account, then an average. If you look at the annual result, if it goes by annual, so far this year we're up 104,000 in that, so you're up 200%. If you look at it that way, or if you put up 70,000, then you're up 130%, 140%, whatever. So it's the percentage is up to you, but dollar amount is what the strategy is. What we're telling you what the strategy is doing. This month we're breaking even. Last month was up 12,000. You can see this year, 2022, is being great for this strategy, and it wasn't that great last year when the market wasn't that active. The minute activity came in, and it really started doing really, really well because it's catching the whole big move, and whatever the trend is, it's going that direction and it's catching the entire trade.
We're up about on a $50,000 trading account. We're up about a cumulative 77,000 as of now. Of course, I always say that might not happen in the next 6 months, but that's what we are from January to date now. If I take into June, we're at a net 70 plus on $50,000 trading. If that was a micro, you put in 5, you're up $7,700 or a net 7 as of today. So that's not a bad turn for 6 months of trading, even with drawdowns. The only thing missing in there are fees. So, you're spending approximately about $200 a month on a micro. So you take 7,000, take off 200 times 6, 1,200 off of that number.
Let me clarify one thing, Marcus, and that is this daily target strategy, which is the pivots, you're not being priced per micro, you're not being priced per contract, because you're getting the numbers and you're trading as many you want.
Correct. You're
So
right.
it doesn't matter. You could be trading size with this same fee. At the 5-hour trend that we are trading here, this is the one that you're being charged per micro because it's completely automated. Or per contract, I should say, for micro or mini, depending what you're trading. And that's on the website, by the way.
I have clients who are trading mini accounts. We ask that if you're trading a mini account, you still do place the trades in micro. That will give you the ability to work with the strategy if you so choose to, because you have some trading proficiency to be able to scale in and out of positions, as opposed to holding one mini. You could trade 10 micro and hold positions in automation and take some off simultaneously. We will show you how to do that. I don't want to go there right now, but just let you guys know, if you're thinking of a mini, just think of it as 10 micro, because that's how we would like to set it up for you.
The only advantage, disadvantage is you're paying a little bit more in commission.
What's the website?
Go ahead.
The website for this is automated in trades, automated with an N as in now, and in trades, TRADES.com. A lot of you,
If you want to put it in the chat, your link.
right, I'll put it in the chat. We do have a strategy performance there. I don't think we're updated quite yet. We'll probably get everything updated over the weekend.
Yeah,
And
the
then
weekend
you'll
we'll
be able
update
to
both
see real
months, yes.
numbers.
Yeah, we'll update them. Just so you know, the only difference between our website and what you see in the chat room, in the screen leap room, is the screen leap room does not have slippage and commission. And the website, we do include slippage and commission.
I have a
Okay.
question. So further to that, so what you're showing here on the screen, when I have my new trade station with the strategy up and I have a performance report open for it just shows January through now, the numbers are slightly different. What would be a reason why this strategy report would be different than mine?
It should not be different because it all depends how much you're paying for slippage and commission.
Okay.
They should not be different at all. There should be very minuscule differences between the two.
No, it's notable. And again, I haven't started trading it, but it's a brand new account, but you know.
So what do you, for example, give me an idea. What are you showing?
Okay, well,
You have-
I'll even give you the June number. On mine, it shows a negative 10,735.
Right,
And the May number is 19,260.
19,000. Where do you see 19,000?
On mine, on my performance report, on my trade station for this strategy.
Well,
You-
something is not right then. Then
I don't-
definitely you.
Real
Then
quick,
the-
Chuck, I don't know if you want to or not, but you do have the ability to share your screen if you want to show it to them. I don't know.
Yeah, so definitely is not right. Your setup is not correct then, definitely. I'm glad you
Okay.
brought that up.
I can take that offline with Chuck, your programmer.
Yeah, definitely. I have a feeling that your settings is not right. Probably your time frame is different. Or one of your setting is not right. So it's possible that, what time zone are you in?
Eastern,
Okay, and does it say EST in there?
it does.
Okay, so something is definitely off, because you should not be off at all.
Okay,
And if I change my my settings where I take out the slippage and commission, you should be $1 to $1 exactly the same.
let's
So
see.
otherwise, definitely you're one of the setups is not right.
Just an FYI, the Screenleap strategy day trader updated, and it shows June's negative 10,740,
Sure.
which is only $5 off his.
Okay. Yeah, I can change this. If I take the commission and slippage off, okay, and you're gonna see I'm gonna be around 10,000 something also. Instead of 11,000, I'm gonna be down 10,000 something also. Because we have 29 trades, and that's gonna be $30 a trade. So we're looking at $1,000 difference right there, more or less, or $900 difference.
On our Streamleap, we have to refresh screen to update performance strategy numbers on there. And we're not sitting right on top of that. We're doing a couple other things, but we try to stay on top of that.
Yeah, it updated while this webinar was going on, so it's probably up to date.
Okay, again, I'm updating mine right now. We'll see what happened.
I'm curious when that finishes refreshing, if it matches because I think when I looked at the settings, when you had your screen up pretty quickly, I think on mine, it's not putting anything in there for commission or slippage on the report.
Yeah, possibly it's not. Let me double check.
Which is what you just took off of yours, so now I'm hoping it matches.
Yeah, it will. It's still calculating. It will redo it, and you see it's going to be the same. But like I said, if you're not matching me dollar by dollar, then something is definitely off.
Okay.
The dailies could be a little bit different because your daily trade station calculates daily from midnight to midnight. So the dailies could be different because your midnight is different than my midnight, but the monthly should be the same. Here you go. It's updated. It became 10,000.
It's still it's closer, but still some differences. Like mine.
It's that.
Yeah.
Yeah. So we have to look at your settings. It's definitely something is you're off.
Okay.
So we need to adjust that. Okay. Otherwise, you should be exactly the same as what we have, because numbers don't lie. It is what it is. Should be the same everywhere.
I mean, come
And
next week when I
the
start
only
trading.
difference could be sometimes it could be also one difference, and that is depending on a data variation. Again, depending which data source you're using with TradeStation, it's possible if you're off, sometimes one trade makes a difference, right? Sometimes just, in my data source, I may get out of the trade, you miss it by a point. It does happen, not very often, but it does happen once in a while.
That's true. Yeah, I'm just
Yeah.
using their standard data feeds.
Yeah, no, I know, but we're all using a standard data feed, but it all depends which data feed we're connected to. Like I'm connected to Denver, I think,
Right.
and you could be connected to, Tennessee, whatever.
Right.
So it does make a difference, and sometimes TradeStation will update their data, and you'll see little differences. It does
Right.
happen,
Yeah, I'd like the
but,
reports
but
to
not a
match
huge
up.
amount.
Right,
yeah.
but in reality, once I start trading live next week, then these reports won't matter as much as, at that point, like, all I care about is my account.
Exactly. That's all that matters, and that's all that matters.
I just had a call in about the setup for this strategy. Why are we asking to put it on a VPS? We're using a company out of Chicago called Ionos, IONOS. We will set it up for you. You pay for the subscription. The first couple of months are free. We'll set it up for you, but I'll let Georgia give the rationale for putting it on VPS.
Right. You don't have to. We recommend it, but you don't really have to. The reason I'm saying is because since the strategy is completely automated, you want to make sure you are completely always connected 24/7. You are connected to internet, and you don't have a power outage, and you have no internet interruptions. It does not mean the VPS cannot go down. It could, but the chance of it's going down is much lower than you going down, depending where you are and depending what your circumstances. So you don't have to. Some people say, my internet is perfectly okay. I can live with it. That's perfectly okay too. The advantage of it, of course, is if you have a VPS, is you can log on to it from anywhere. From your phone, from your, from your laptop, anywhere you can log on to it and keep track of it. Because every time there is a trade, you will get a text from us. So that way, all you have to do is just log on and say, hey, did my strategy go long? I got a text saying I'm supposed to be long. You look at it, yeah, it did. Okay, good, thanks. That's it, no more. You don't have to worry about it. And that's the whole reason behind it. But like I said, you don't have to.
Follow-up question related to that. So this is Chuck again. So I did do the VPS, which I'm looking at right now. Is it a good thing for me to install TradeStation locally on my PC just in case, or actually would that cause a conflict?
No, it doesn't cause a conflict. But if you log on to a TradeStation from your PC, your VPS will be disconnected. You cannot log on from two different locations.
Right. But if for some reason the VPS went down and the trade's open and I want to make sure nothing goofy happened, I can load it up on my PC.
Yeah, you can. You can definitely load it on your PC. And your VPS goes down and you want to have access to it, just fire up your own PC and log in, and there you go.
Okay, so I should install it just purely for mercenary backup.
Absolutely.
Okay.
Yep. That's a good idea, actually. Yeah.
That said, if you got like I know with Ninja, I have a multiple license connection, so I could sign in on multiple computers. I'm assuming you can do the same with TradeStation. So you could technically have TradeStation on and see the trades there while the VPS is running just as a secondary.
No, you can log on from multiple PCs or multiple locations. But the minute you log on from a second location, the first location will turn itself off.
No, I understand that, but if you have a license, if you have their multiple broker license where you're able to do that,
Oh, yeah,
you still can't
absolutely.
do that. Yeah.
Yes, you can. Yes,
Oh,
you
okay.
can.
Okay.
Yeah, and you can get a second one. I think they charge you only the
Data fee.
yeah, just I think it's $25 a month, whatever it is.
Yeah, something like that.
Data fee. That's all it is. So yeah, you can. Yes, you can.
So you could then, in essence, have the VPS do the main thing, but you can kind of just look as a backup, if you will, where if you wanted to move something or just go flat, you could tag over.
I would not recommend doing it from a different location. You don't really mess it up since you're trading from your VPN. If you want to do any changes to it, it's really, you should do it from the VPN.
So sign in there. Okay.
Yeah, definitely. But you can log on from your own personal PC and we'll log the VPN off completely and you'll start all over again, not a problem.
Okay.
And you'll see the strategies long or short and it'll come back up again, perfectly okay.
But I can confirm that, not with the multi-license item that Steve is bringing up, but again, just setting this all up this week. So yeah, right now I have the VPS up on my computer screen. But if I wanted, and I've now set up the mobile app, so if I go to my mobile app to see the VPS, it will say, hey, you're logged on somewhere else. So it'll actually
No,
close down my
that's why-
VPS instance on my computer, and then I can see it on my phone, and vice versa.
Right, that's why I recommend from your mobile app, you log into your VPS as opposed to logging TradeStation.
Right. Yeah, no, it's definitely logging into the VPS, not,
Yeah,
not,
oh yeah,
not the trade
yeah.
station app.
Yep. So that way you could see it.
Right.
And you can control it. You can do anything with it. So that's the advantage of having a VPS actually is to be able to access it from anywhere.
Okay.
All right,
One
good.
other, well, so actually, a main question I had at the very beginning,
Sure.
so I think you initially responded to the question I put in the chat about the core strategy, and this is named 5-hour trend. And I heard you make a response to linear regression, and I apologize if I missed this. But
Sure.
what is the 5-hour aspect of how you named this? Is this truly based on a 5-hour trend? Because again, given today is the perfect example where it was taking trades in both directions very quickly, I found that a little surprising. If the approach is largely tied to a much higher time frame trend, it wouldn't change that frequently.
Right. Great question. Actually, let me answer that. Like I said earlier, the linear regression, the strategy is based on the linear regression, and we use multiple time frames for the linear regressions, and really that's all it uses in the using. It's kind of a complex way of doing it, but that's what we're using. The dominant one is a 5-hour linear regression. However, a lot of times you will have convergence of different time frames, and that will change it. So just because we're using 5-hour trend as a dominant one, it doesn't mean if you have 3-4 of them converge in one direction, it cannot change it. So it does change it. So today is an example of that. It doesn't happen.
If the lower time frames, the lower time frames are in alignment, but it's opposite the 5-hour, it obviously will still take the trade.
Exactly, that's what happens.
Okay.
Even though, like I said, a lot of them have to converge for them to override the 5-hour trend. And in this case, it did. So that's what happened. Yeah, it doesn't happen very often, but it does happen. Most of the time, we will trade once a day, sometimes twice a day. But like today, we had, I think, 3 or 4 trades. Yeah.
George, I got a question for you.
I'm sorry, Pete.
Yeah, I got a question for you.
Go ahead.
In terms of the numbers that you're showing on the fully automated system, it looks like about the last 6 months are live money, and then
Right.
prior to that is its back testing. Have you gone back prior to 2020?
Yes, we have. Yes, we
How-
have.
How far back have you gone?
We've gone back till 2008, actually.
Do you have those numbers?
I'm sorry.
Do you have those numbers?
I don't have them here. No, they're not as good, but because TradeStation, I mean, NASDAQ NQ was a different level. So the idea is the strategy adjusts itself based on what NQ is trading at, because now, NQ is trading at 12,000, 11,000 and change.
Right.
Back then it was trading at 3,000 or 4,000. So it was a whole different market. And because of that, we have to make some adjustment to it. And we do this on a periodically, on a quarterly basis. We do make that adjustment for that moving forward. So going back, it's a lot of work for us if we're going to go back and reconstruct all these numbers. So it's a whole different market, like we said. So that's why we're not really paying attention to it.
Yeah, but the reason for the question is that the volatility back then, and there's periods of volatility during that time frame that it was a lot less. So if you're executing a 5-hour trade roughly, linear regression, the results are going to be quite a bit different, and possibly not as advantageous as the current market condition that we're in.
And you're absolutely correct. Yes, if you go back before 2020,
Yeah.
when NASDAQ was lower and the volatility was much less. Also,
Right.
we have in here volatility indicator too, but built in, by the way. And because based on the volatility, you may not take some trades some days. So you will see no trade some days, and it has to do with the volatility too. So with the integration, we have volatility filter built into the strategy. So if it doesn't reach that volatility, will not take a trade. I'm talking about the 5 NQ, not the daily target. Daily target will take a trade most days, but the 5 NQ, and it doesn't change, by the way. That's just the same regardless. But the 5 NQ is a lot more sensitive to volatility, and so the more volatile, the more advantageous the strategy is.
So it really banks on volatility.
Yes, it does.
Right.
Because it's riding the big waves, So it's trying to catch those big trades. That's really all it's trying to do. As long as there's a big trend, let's put it that way. We just want to catch those trends, those big trends. All right.
All right.
Anybody else?
Thanks, everybody.
I put my email out there, guys, for you to reach me. Market Automated and Trades. If any of you want to set up on a TradeStation platform, we have a designated broker out of Chicago with TradeStation who will facilitate that for you. I'll send you his contact information, his paperwork, VPS setup. We handle that for you with you on the phone to get you subscribed and then help and do the installation. This is 100% hands off. The most detailed information you need is what you just received here. I think that's it.
Hey, Mark, you posted your email earlier before most people came in. It's probably not seen by many people in the chat, just an FYI.
Okay. All right. I'll just send it out again.
If you folks have any questions at all regarding, trading in general, you can definitely, reach out. Feel free if you have any questions in general regarding, not just strategy itself. And if you have a strategy yourself you want to check out, or you have some variation of it you want us to play around with, we'll be more than glad to help out also. And we've done that before to a lot of clients, so feel free.
I think we're all still looking for the Holy Grail.
No such thing.
Yeah.
It's all based on probabilities. Really, that's all it is.
Yep.
It's the hardest part to understand.
And I just got back from Vegas and I think they got it mastered because they're looking pretty good there.
Absolutely. Oh my God. Absolutely. Yep.
All right, guys.
Well,
Thank you
All
very
right.
much.
all of you.
Thank you very much.
Well, I'd like to thank both of you guys for coming and giving us a little demo and clarifying some questions, and we can move forward from here then, I guess, in our little chat.
Hey, Steve, are you going to put something in the chat where the video will be placed at and how to reach it? I've got a number of people that want to see this.
Yeah, I'll post it, probably somewhere on there. Yes, I will.
Okay, let us know. Thank you.
Alrighty, guys. All right. Well, then anybody who wants to stay and chit chat, you're more than welcome. Anybody who wants to dump off, you certainly can go. And again, Marcus and George, both thanks for sharing your knowledge, and we'll go from here.
And thanks again for having us. All right. Good day.
Bye-bye.
Hey, what's up, Steve?
Hey, what's up, Lloyd? I haven't seen you. I'm gonna turn off the recorder here. Hold on. Stop recording.